Great. Okay, so I'll just get started with the disclaimers. And as mentioned, we're going to talk about the ProScan today. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. I'm Jason Hitchings. I'm the CTO at Capital Market Labs. So we're just going to focus on the ProScanner today. It's called ProScanner for we used to have a very simple version of TradeMachine back in the day, so it's been called the ProScanner ever since. So we'll do some filtering by strategies, we'll sort, we'll filter, and we'll look at setting alerts, and we'll do some kind of portfolio scans, if you will, in the ProScanner today too, and then we'll just jump into questions. We're aiming for 30 to 45 minutes to kind of make, just be conscious of your time commitment today as well. Okay, so I'm just gonna mostly just pull open the backtester and go to the ProScanner. When you see this tab, so you kind of start here. If it's the first time you've clicked on it, it will be blank, but then it kind of starts to remember your settings. Up in the top left, you click which ticker group you're interested in. By default, it scans by strategy, and so it'll always be working off of one of these strategies here when the strategy tab is activated. You can also scan by ticker, which we'll do next, but you can pick a group of symbols. All tickers will obviously just give you the whole market, but if you know for liquidity purposes or something else that you want to focus on the S&P 500 or NASDAQ, you can select that here. Then on the left-hand side, you have a lot of strategies to choose from. So by default, TradeMachine generally has a settings of never trade earnings. So our philosophy is that if you're not trying to trade earnings, then you probably don't want to hold through earnings. And if you do want to trade earnings, then you should have a specific strategy for earnings. If you're just testing something like a straddle or strangle or fade the dip or anything else, then we tend to just hold those when earnings is not active. And for us, as most of you know, I'm sure, never trade earnings means you would sell the position 2 days before the earnings event, and then you just reopen the position if all of the other technical conditions are true, starting 2 days after the earnings event. So you don't take that earnings gamble without meaning to. So once you have the strategy loaded, so at the top here, it's kind of the general bucket of all kinds of different strategies, including, the fade the dips and the Bollingers and all of these strategies, the spread, the sell-off. These are not earnings specific strategies. So that's kind of the largest group at the beginning. And if you want to dive deeper into any of these strategies, you can go to the Learn tab, and there'll be a specific video and oftentimes a write-up on these specific strategies. Below those is the only specific earnings strategy we have is just long strangles through earnings, but you can obviously create your own. And then we have some after earnings strategies. And many times those, in addition to being after earnings, they will often look back at what the previous earnings event was, like in terms of how the stock reacted. So many of those strategies will have something built in, such as if the day after the previous earnings move, the stock was up 2% or down 2% or something like that. Not all of them, but many of them use that feature of TradeMachine built in. So that kind of, you get a sense of the momentum coming out of earnings, whether you're looking for, something bullish or bearish. We also have a lot of pre-earning strategies, and a lot of these take advantage of optimism that comes leading into earnings. Oftentimes, there is a hope or a thought, especially in a bull market, that the stock is going to start doing well. So out a week or so before earnings, the stock sometimes will start trending higher. And even if the stock doesn't trend higher, oftentimes people start loading up on options going into earnings. So oftentimes the options themselves can get more valuable going into earnings. And some of the diagonal strategies will kind of take advantage of that buying pattern or that volatility pattern. Many times they will sell an option that's going to expire before earnings. So the volatility, the theta, the time value in that option will be dropping off very quickly. And the option that you own after earnings will be maintaining its value or sometimes even increasing in value as people start loading up on options, anticipating that earnings event. And many times that will kind of cause the implied volatility of the option to increase and the value of the option to increase. So many of these strategies take advantage of that phenomenon. Not all, but many. So once you've selected any of these various strategies, that's fade the dip AI, etc. Anything that says AI after it is using this kind of quote unquote skew and kurtosis, the tendency of stocks to make large jumps or to have a jump in one direction or another. And there's more to it. And so we kind of give enough information to trade it without trying to go into all the details of that. So once you're at this screen, all of these fields are sortable. So if you wanted to look at the total number of wins, you can do it this way. You can look at win rates, you can look at average percent returns, so that's can be a powerful way to sort these guys. Additionally, you might know that you're looking for things that have done well over a certain time frame. So you might be focused on just the recent, sort of bullish market, or you might say, hey, I want things that have done well even when the market wasn't doing so great because I'm not sure how long I think this bull rally is going to last. So you can do it by filtering out these years. You can say either 1 year, 2 year, or 3+. Some strategies have 5 or even 10 years, but almost all have a 1, a 3, and a 1, a 2, and a 3+. So there's some additional filters you can put there. Now, a couple more things I want to talk about. You can also filter these scans. So if you click the filter, you can say, no matter what I'm looking at, I never want to see a win rate lower than 70%. I want something with a high, that this trades tend to, win at a high percentage. You can say, I want the average trade return to be, 10 or 20%, and that I want the total backtest return to be, you can pick any number you want. Once you apply that filter, it kind of stores these settings in the background. So if you come back to the page, it's going to still show that you have these 3 active filters. If you ever want to change them, you can just click here. You can also clear the filters with this button. But when those are active, then it'll apply that filter to all of these scan results. And so, we have minimum total backtest return set as 80%. And you can see when we sort this column from minimum to maximum, it starts at 81% as the total backtest return. So you can apply these across the board to kind of narrow down the strategies that you're looking at. And you'll notice here this kind of alert column. What this alert means, so the ProScan tab, just big picture, the way this is working is that we are taking all of these strategies, 30 or more strategies, and we're scanning, every single ticker for these strategies on a very, frequent basis. And we show the results here for strategies that have done relatively well. So we're not showing things that have lower than a 50% win rate or that have a negative return. So we do kind of apply our own, filtering in the background to these strategies just to kind of show you the ones that have had good trends. Anything here that shows an alert, so you could think this is a little bit like running a back test instantly. So if you wanted to look at, something basic like long strangles, again, all these filters are being applied. I'll just clear the filters. It's kind of like you just back tested the market for this long strangle strategy. And right now, I'll be looking at the largest 500, but it's showing you all of the results for things with reasonable returns. So these are essentially like back tests that have already run. I mean, they actually very much literally are back tests that have already run in the last week or so, and then we've done some filtering on top of it. This long strangle with a never trade earnings, it doesn't have any earnings specific trades. It won't hold it through earnings, but it's not an earnings trade per se. And it doesn't have any technical conditions built into it. So for that reason, essentially, if you like this straddle trade or any of the others that don't have technicals or earnings conditions, they're essentially always ready for entry from the back tests perspective. If you pick one of these strategies and put it into the back tester, it will trade immediately at the start of the back test. So back test, this is the first day of the back test, and it trades immediately. Then it, applies all of the conditions and kind of moves forward in time. So if it says that alerts are not required, what this really means is that these are kind of always active. You also notice that this triggered will always be true as well, because there's nothing unless you're within 2 days of earnings, it's going to show that it's available to, that it's triggered immediately. And for platinum users, you get this show options button, which you can actually see the individual options down at the bottom after it loads it, and this would say this is how you would enter the strategy. So any of these strategies that you have, you just need a reminder. If you don't need a deep dive into something like a mammoth or fade the dip, but you just just like, okay, well, what deltas are you using, or what days to expiration? If you just click any one of those, it's going to pull up all of the details. You can say, okay, oh, it's 30 days to expiration. Oh, this is it's a 50 delta straddle, not a strangle. So it'll load all of those settings directly. There's no add alert feature, because all the alert would do is say, okay, you can immediately enter. So that the alert wouldn't be providing any additional helpful information. However, if you do a strategy that does have technical conditions, this little alert field will pop up. And if you want to look at, the high average trade returns or whatever else, then you can start clicking some of these. And now when you add these to the thing, then you have the ability to add the alerts that way. Yes. Okay. So then additionally, you can also look at these strategies on a per ticker basis. So instead of saying, I want to look at, a fade the dip strategy or something like that, you can look at individual tickers. So you could say, I want to look at AMD, Apple, NVIDIA, etc. And I just want to look at the best strategies for these particular tickers of interest to me. And you can apply the same kind of filters. You can say, I want a win rate of 80%, and filter those out, and it'll apply it across all of the tickers that you enter here. And you can build these lists from anything that you want to. So anything that will export a list of tickers in this kind of comma separated or space separated format will allow you to filter those and to look at those tickers specifically, and then you can add the alerts in the same way here. You can put notes, etc. Let's see here. Okay. Yeah, one other thing I wanted to show real quick, and then we can dive into some questions if I have Pattern Finder. So for anyone that has Pattern Finder, and I just use this as an example of a way to create a portfolio. If you look at the stock screener down at the bottom, there's a very detailed stock screener with, hundreds of different fundamentals and relative strength conditions and institutional ownership and all kinds of different parameters built in here that you can use to customize a certain, list of tickers. And so once you have a list of tickers created, you can export that list of tickers. And then when you open it up, we can take these tickers and put it into this scanner and start to filter off of that list of tickers. This is one I just dropped in here. And now all of a sudden you have a sort of a portfolio, almost like a portfolio backtest, but you can test a lot of different strategies at once. And you can say, I just want to look at the results that have had, the best across these list of tickers that I'm interested in. You might screen on something fundamental. You might take a list of CML Pro tickers that have done well and look at bullish strategies around CML Pro top picks, for instance. And then you can, again, just kind of like, go through here and add the alerts, for any tickers that you're interested in that way. So this is a large list, but you can, instead of sorting by ticker, you could sort by average return and, pick the strategies with the highest average return and, add alerts that way. So that's kind of a quick overview of some of the features within the ProScan. And with that, I'm happy to dive into any questions that we have.
All right. Why are there no alert boxes? I think you answered that actually.
Yeah, the alert boxes are when there are technical conditions or if it's an earnings trade, more than just never trade earnings.
Is it possible to track IV on these diagonals with the backtester?
It depends what you mean by track IV, but not directly, not really. I mean, all of these trades are, trading. Anytime you're trading options, you're trading volatility. We had a volatility index in the product, and then SIBO kind of made it more or less only for institutional investors. They kind of made the price, so it no longer made sense to license it in a product like ours. We do have access to another IV index that's from the person that we just from a different vendor. So we're kind of assessing that to see if it's going to be a good fit for us. I have also created IV indexes in the past. The product that SIBO was actually selling for a long time is something that I built at my previous company, LiveVol, and LiveVol got bought by SIBO. So we have, that's something that we will eventually, build out and put back into the product if we can't find one that is good enough. So right now, there's not a way to trade the volatility, the implied volatility of an individual stock directly. However, when you're looking at, like, basically, if you're doing something like the earnings vol or something like that, then you're trading the the phenomenon of how the earnings implied volatility changes over time. You can trade the market volatility by using a technical open with the VIX. So that's going to tell you what the implied volatility on the S&P 500 options are. So that is a technical type, the technical trigger type that you can add. So that'll tell you something about the volatility of the market as a whole. When it comes to saying like, hey, if the implied volatility for the front month options is above 30, then I want to buy or sell or put on a certain position. That specific thing is not in the product, per se right now. We'll probably get it back in there, I think, within the next few months. Again, when you're the backtester, essentially, if you're looking at like when the stock drops, if you look at when the simple moving average 50-day crosses down under the 200-day moving average, when that stock starts to drop, you're going to be looking at increased, volatility oftentimes, and obviously as you're going into earnings events. So it's kind of ways you can trade it indirectly. Yeah. So that's. But we will get the implied volatility index back in there pretty soon. We actually were finding at the time that people weren't using it that heavily. But now that I feel like more recently people have been asking for it more, so it kind of puts it higher on the priority list for us to get back on the product.
Can you scan for seasonal trades?
No, we don't really build that in. I mean, you can create it that way. I mean, you can set the back test. You'd have to construct it a little bit. So you could say like, hey, I want to trade something, summer trades, and you could kind of look at the last couple summers, and you could export that list into um, Excel. So you could kind of, if you want to do the legwork, you can kind of like construct it, um, with a little bit of extra work. If you want to do a portfolio back test of the Dow 30, where you're just looking at some kind of call spread or whatever else, um, you could then export those trades once it like completes those. Let's see what this technical open thing is. Um, then you can export those into a list and um, construct it that way. But inherently, it doesn't have like a ability to trade only a certain portion of the year, or something like seasonally that way.
Buy the sell-off for Humana doesn't look good. No open interest.
Great. Sounds
Uh,
sounds like you know how you feel about it.
yeah.
Well,
Sorry,
also
I missed.
open interest, that's fine. Yeah, I mean, no, if there's literally no open interest, that actually does mean something with liquidity. Our general philosophy is that market width tells you a lot more about liquidity than open interest. Um, there's basically if a market is 3 cents wide, you can trade it. Unless you're trying to do 1,000 lot. If you're trading with a $30 million account, then open interest can make an impact. I mean, if there's no open interest, the chance of having a tight market is pretty small. Um, but open interest is a pretty indirect measure of liquidity, whereas market width is a very direct measure of liquidity. So we are actually building a liquidity feature into the product. So this is a development environment, but pretty soon you'll be able to filter on liquidity, kind of rating things on a scale of 1 to 5, where 5 is the most liquid, and we're looking at the width of the market as the width of the market relative to the stock price as the number one indicator of liquidity. So that will be in the product pretty soon. I think you guys can all expect it in April. So that will be both in the Today tab. Today tab is the first place it'll appear, but we'll start to populate that information in the back test as well.
Sorry, I missed how you get to the scanner. Can you please show again?
Yep, you just click this ProScan tab. So these tabs at the very top for brand new users, and welcome. Thank you so much for joining our community. These are the main ways to navigate within the product. The Today tab starts with these kind of things that are anything that says today means it's active and ready to enter when the strategy occurred. Backtest allows you to really look at how that's performed over time and tweak it. And then this ProScan tab is how you get to all these results. And so again, you can pick a group of tickers, and then you can pick a strategy, and it's going to show you. We've kind of pre-backtested all of these results, so you can kind of quickly look at what's done the best over time.
Earnings season starts in 2 weeks. What's the best strategy to scan for consistent earnings place?
It's an interesting question. It depends what you mean by best. I think there's a strong argument that what has worked in a particular ticker, like if you know the tickers you're going to trade, then I would trade the things that have performed well in those tickers. I mean, they need to perform relatively well as a whole. The things that we would guide you to, it takes a little bit more effort, but these diagonals, like this pre-earnings 14-day diagonal, the diagonals are really powerful with earnings because they're allowing you to both take advantage of the positive momentum in earnings as well as offset some of the, the expense of owning the position for a stretch of time. So as you can see here, Bank of America has, earnings April 16th. There's nothing here that says not verified, so that means that you can count on this date. Otherwise, it would show in red, not verified. And this is owning a long, 3750 call after the earnings event on the 19th. And it's selling a slightly more out of the money call before earnings. And so what that means is that as the stock goes up, you're still going to benefit. For a long time, this 3750 call will always be more valuable than the 38 call. And basically, outside of some very strange scenarios, if the stock goes up, you're going to be making money, but it can go up quite a ways. And when this front month option expires, you're going to still have all of that implied volatility built into the option, because this option is not going to carry the earnings event. So it's a two-legged strategy, so you have to have an options account that allows for that. But these are powerful strategies because the market can move against you quite a bit. Like if the market goes down quite a bit, this short thing that's expiring sooner is going to lose a lot more value as well. So you're both kind of hedging against direction and hedging against the options decay. So I would strongly consider those.
Say I've run a back test that has over 175 viable alerts, and I use the select all option. Will it select all 175 alerts?
It will. Yep,
I
you'll
saw,
have you can set a lot of alerts. We have a couple users with over 6,000 alerts set.
yes.
So
And
yeah.
yes, they use them.
Yep.
I sell credit spreads to collect premium. What's the best strategy to scan for high IV and liquid stocks to sell credit spreads?
High IV and liquid stocks to sell credit spreads. All right. I mean, so first of all, you can always create your own. So these are the ProScans are a good starting place. So if you look at, there's like a short put spread here. Let's see here. Yeah. And then if for liquid, the kind of the fastest way to narrow it down is to just look at like the largest 500. So you could look at a short put spread like that. You could also create your own and do a portfolio backtest. But if we wanted to do, that's an example of credit spread. And then you could set filters on, things with average return over 20. And, that's one example. I guess, 20% for these short put spreads is actually quite an aggressive amount just because the strikes are relatively tight together. But there's that 10% average return. And so that gives you, a lot of, put spreads to choose from. Additionally, you can go into the backtester and look at a portfolio that, the QQQ is the Nasdaq 100 is already built in there. And you could do a call spread and you could do a short call spread and kind of see how those have done over time. And you might say, okay, well, let's look at trading these when the 50-day moving average crosses down through the 200-day moving average, so it kind of shows that it's peaked, or you might check the reverse. Additionally, you could say, I only want to trade it if the VIX, like I don't want to trade it when there's like a lot of scaring in the market. So I only want to trade it when the VIX is below 14 or something like that. And you can start to create your own, strategies that way. And if you want to, you can actually get in and start to tweak the specific strikes that you're using. So this is saying you're shorting the 50 and you're long the 20 delta. And so meaning you're short and at the money and you're long something quite out of the money. But you can get in here and, tweak those deltas as well. So you can certainly, kind of create your own back tests that way.
I only know of one bearish strategy. Is there more?
Yeah, the sort of pretty strong desire from most users was to take on bullish strategies. There's not a ton right now of bear strategies that are pre-built. But again, you can those are strategies that you can definitely backtest and create to your heart's content. I mean, anything that you can do long, you can do short, and you can take the reverse of any position. Yeah, so we may start adding some more of those in the not too distant future. Right now, there's only a couple built in there.
Um, just to add in, your last example was really nice. Um, how did you open the banner in the Bank of America to show the legs?
Aha, let's have a look. Okay, so here's
Uh,
just a random Bank of America trade here. Oh yeah, so yes, this is a new feature for annual users. We have a subscription to a live options feed that we have to license per user. So, for people that make a year-long commitment, it allows us to afford that. So everyone can see this. Everyone has access to this saying whether it was triggered now. And you can find the actual details. So here, this is this diagonal spread. If I click edit, you can see you're long the 50 delta call 14 days out, you're short 30 delta call 7 days out. And within your brokerage, you can look at those, or in when you show the options chain here, this is just populating from the Cboe live options feed. That'll come up in just a second, but you can look up the deltas and expirations that way. And so that's the classic way to do it. It takes a little bit more work. This is a very, very new feature just in the last month or two, is this show options feature. And when you click the show options, then it just dives in and shows you those details directly. So this is kind of a time saver, leveraging that live options feed, directly for Platinum users. So this, we'll kind of look at the economics of it in the long run, but we kind of, anything that we're not sure how we'll be able to scale out to the entire community, we kind of start with the people with the annual commitment. So this feature is available for the Platinum users right now. And if you're interested in going annual, you actually save a little bit of money over the monthly subscription. And you just email support and we'll get you all set up if you're interested in that.
And just to add, I believe it was the very last session that we did, you went ahead and dove into finding those options as if you weren't a Platinum member. So I know you walked through how to identify what options. So if you're looking at a more detailed explanation, definitely check out that last live help session.
Yeah, and so if you click on the Learn tab here, you see this little square at the bottom that says like live help session. So for the most recent ones here, yeah, I think it was just this active now, show options, etc. So there's a whole video here. You can watch that whole video. So yeah, the help, I mean, the Learn is something that Amanda's built out as kind of an effort she's taken on, and it's a really great resource. So definitely encourage you to hop on there.
All right. Are there any hedging strategies built in?
The philosophy that we have around hedging is it's your portfolio as a whole is kind of your hedge. So having positions that are long volatility and short volatility and long, bullish and bearish is kind of the best hedge against, things moving one direction largely against you. You could look at something like the 1x3x2 strategy. I mean, that in a sense is hedged. This guy up here, just from the nature of it, it's a broken wing butterfly, but it's buying back an out of the money like put that's quite a bit out of the money, but it's hedging you against like a really nasty downward movement in the market. It also is better from um, from just how much capital is going to get tied up, from a buying power perspective, so as it's like kind of flattens out the position, quite a ways down. So that's kind of like hedging against, in a sense, against like a deep move. You get neutral, below the 135 level. So lots of strategies have that sort of hedge built in, or even the diagonals. In a sense, it's a hedged version of just taking, because you could also do with the diagonals, you could do a direct long call for earnings that happens after earnings. Sorry, the today tab has to constantly like rebuild the cache, and then it runs faster. Yeah, so there's two versions of this. You can actually see that both strategies are here today. So this is the pre-earnings 14-day call, and what it's doing is buying the call that expires about 14 days out, but also after the next earnings event, and it happens 14 days before earnings. So this is the straight call version of it. You can actually see, because this one, it is a hedge. In this case, it doesn't always work this way, but in this case, the unhedged version is returning 236%. This version is essentially a hedge. It's starting with this strategy, the long 14-day call, but then you're hedging it with another option. So let's look at it one more time. As Ophir likes to say, the only way to truly hedge an option is with another option, because if you're owning stock, then you're not hedging against implied volatility, for instance, and options decay and stock doesn't, etc. Yes, so this long 3750 call, this would be the entire strategy if you weren't hedging with this front month option. So, but by selling this short, slightly more out of the money call, it reduces the cost of the position substantially. It hedges against the decay of the option, and it hedges to a certain extent against directional risk, because if the stock goes down, this slightly more out of the money option is going to depreciate in value much faster than this option that's expiring, that's a little closer to at the money, and that's also expiring after earnings. So in that sense, yeah, pretty much all of the multi-leg strategies are building in, that you're hedging your long option with the short option.
Please show an example of how to use Ask GPT.
All right, let's have a look. Oh, sorry, that's my development server. Okay, so so this is, in a sense, looking at something similar to the ProScanner, but doing it in a format which is in a sort of text-based way. You can also say, what is the sentiment for NVIDIA? So this is actually going to look at the news and look at the current headlines, and this will kind of go into a pretty deep level. And so this actually will go pretty deep on everything going out. It says that the relative strength is 97 out of 100. So that's, strongly bullish. The volume on up days was 1.4x higher than on the down days. And it breaks it all down. Yeah. And the final sentiment score I computed is 100 with a 9-point adjustment beyond news. And that makes sense, because NVIDIA is, about as bullish as you could, think of. So, but all of these, things have kind of some pre-built in questions that you can kind of use as a starting place for interacting with ChatGPT. This one is kind of doing a breakdown of stock versus the market. It's a pretty in-depth, piece of research there that's just generated through these prompts. So yeah, definitely play around, and there's a lot of great value there.
I would highly recommend if you're just getting started with it, use the pre-populated prompts and then update with the tickers that you want to see. It helps you get a really good feel for how it operates and exactly what it you that way you make sure that you're getting what you want out of it and getting the correct data. It takes a little time to learn how to properly engineer the prompts if you're new to it.
Yeah, and it can answer a lot of questions. I mean, we are feeding our own, if you just go to ChatGPT and try to ask these questions, it will not have an answer for you. Um, what we've done is take our own proprietary data, our own backtesting, our own, relative strength, or like lots of different data and kind of given real-time data to the large language model so that you can combine analysis of real data with the power of these large language models to both interpret data and also kind of summarize and present it in a human readable format. So there are things that are beyond that we haven't given it the data to work with. But there's a lot of areas that it does have pretty powerful data to work with. So there's it can't do everything, but it can do a lot. And like Amanda said, starting with those prompts at the top is a great way to go.
Right. Looks like we just have a couple more. Today's screen, you have already had lots of choices. Which one should we pick? So I think they're
Yeah,
referring to the strategies.
yeah, totally. So there's quite a few things here. I mean, there's a little piece of text here that says beginner, intermediate, advanced, etc. So part of this depends on your like options trading account and can you do spreads and that kind of thing. Pretty much all of the beginning strategies are just one leg, generally just a long call. So if you're relatively new to options, those are a great place to start because the complexity is lower. In terms of the some of the most powerful and the highest returns have this are what we call skew and kurtosis, like our sort of stock movement model that we developed with AI built into them, and those have shown really, 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 really strong returns. So if you're just like, hey, I want to put on one trade today, I'm open-minded about any of them. Looking for things that have this little AI flag are going to be some of the best performing trades typically. The two that happen to be showing right now are both um, three-legged strategies. So these are, this is just a more complex strategy. It has they tend to have pretty high win rates and good returns. So they're great strategies. They're just a little bit more complicated. And they also involve, you have to have an options count that'll let you be net, short. These are short spreads. So yeah, so that's the only caveat with these. But the beginning, intermediate, advanced is also gives you some pretty good clues. This isn't, this earnings strategy is a pretty cool one. It's only two legs. It is they're different expirations, but those are pretty powerful as well. But I personally I look at things that have a really high win weight and high return. If it's 8-1, but it's only returned 27%, that doesn't I don't feel super motivated to jump into it. But when I see things that have 7-1 or 6-1 and high percent returns, etc., then those are pretty compelling to look into. So this bearish burst is an example of a you know bearish strategy. I think it's the only one that's specifically bearish on the today tab, but there are you can create bearish strategies within the tool. Another thing that's great to do soon, we're going to have a liquidity filter at the top, but I'd say if you're looking for like one trade to put on for the day, filtering by the largest 500 is a great thing to do just to save you the headache of logging into your brokerage and then looking at the options montage and finding that things are super wide. Things that are in the top 500 of market capitalization tend to have pretty tight spreads as well. And so, just based off of this, if I was a new trader, especially if I wanted to do like a one-legged strategy, then it narrows it down pretty easy because there's, this strategy is, just buying a call going into earnings. We're not making any specific advice. We're definitely in the, teach a man to fish versus, trying to tell you what we think is the best thing to do on any given day. Um, but yeah, so hopefully that was helpful. Also, if you're just trying to figure out like, what is the strategy? Why does it, why do I care? Why does it make sense? Each one of these has a question mark. They generally have a video link to it. This is a, 8-minute video that will go into depth about what this strategy is and how it was developed and why it's worked well in the past. We're coming up on the 45-minute mark, so I want to be a little conscious of everyone's time, but if there's one more question, happy to take one more.
Yep, it looks like we've got one more. Can we save a portfolio of my all-time high stocks? So can you show how to create
Yeah,
a portfolio?
absolutely. So in the back test here, under portfolios, there's a bunch of pre-built in. There's like on different industries and NASDAQ 100, etc. But if you click new, you can say my best performing stocks, and then you can just enter with spaces or commas, your particular stocks of interest. You just click add, and that's it. And then you'll have your portfolio, and you can backtest against that portfolio directly. Then the next step is to say, if you develop a strategy such as, whether you start with one of ours or, build your own from scratch. Because here, let me show you another thing you can do. There's on the saved backtests, we have a bunch of like pre-built strategies here, which are pretty powerful. So let's say you wanted to do the pre-earnings diagonal and you only wanted to do it if the stock kind of movement, this stock skew and kurtosis stuff is advantageous. You could load that strategy in. When you do that, it's going to load just one backtest, the one that's saved backtest. But the nice thing is now you have all of the earnings rules, all of the technicals, everything is going to be built in here the way that we've, backtested this strategy. But now you can click on your portfolio, go down to my best performing stocks. And, this can be for annual users, this can be up to 200 stocks long. So you can see how they've done, and you might say, okay, this is a very basic example, but now you could click just the tickers that have done well in the past that you're interested in under this add alert column. When you click add alert, you add that backtest into your list of alerts, and it will now text you or email you when that happens. So now you're saying, okay, this is actually live now for me to trade. Great. I think we're about 50 minutes. Very much appreciate everyone being here. See, there's maybe one or two more comments or questions that have come in, but we do want to keep it to 45 minutes just so that people feel like they can join in the future. Some people are like, hey, if it's 2 hours long, I'm not going to join it because, I don't want to leave in the middle and I can't take 2 hours out of my day. So I appreciate very much you all being here. We'll look forward to seeing you next time. I think that will be the Thursday after next. We're doing these once a week now. We alternate between Tuesday during market hours and then Thursdays after market hours. So we kind of alternate weeks that way. But very much appreciate you all being here. Please, log on to the community and, come talk to us and ask questions and share, backtests and experiences in your trading experience. I would love to see you there. And thank you all for being here, and we'll see you next time.